In this video, I'm going to share with you what you can do to get pre-approved for a home loan in 2024. So if you are planning to buy a home this year and you're wondering what you can do to prepare yourself and find out how you can get pre-approved for a mortgage and really find out how much home you can afford, this video is for you. Yo, welcome back. This is Isaac Owens, your real estate and mortgage consultant. And if you are planning to buy or sell or refinance a home this year, or if you're planning to relocate to San Diego, definitely let me know. I'd be happy to connect with you and answer any questions that you have and ultimately help you make this happen easily and effortlessly. If you didn't already know, I am a licensed real estate agent and a licensed mortgage loan officer. And so I would love to hear from you and really help you be able to understand what steps you can take towards achieving your homeownership goals. You can find all of my contact information in the description below and schedule some time to speak with me, and I'd be happy to connect with you. So if you've never bought a home before and you're wondering what the very first step you can take is towards buying your very first home, maybe it's a residential property that you want to live in, or maybe it's even an investment property, this video is going to be helpful for you. And I think a big mistake a lot of people make who are in the market to buy a home for the very first time is they go out and start looking at different properties and connecting with realtors and real estate agents without actually getting pre-approved for a home loan first. Because the first step in purchasing your home is to get pre-approved with a lender. The reason why it's so important to get pre-approved for a home loan and get pre-approved for a mortgage before you go out and start shopping and hunting for your very first house or maybe your dream home is because when you get pre-approved for a mortgage and get pre-approved for a home loan, you find out exactly how much home you can afford. And that's going to allow you to narrow down your options and really hone in on finding the right home for you. At the same time, I also network with a lot of real estate agents here in San Diego and Southern California. And a lot of realtors and real estate agents want you to be pre-approved with a lender before they even talk to you or before they start taking you out shopping and looking for that home that you want to buy. And the reason why is because they want to see that you're serious about this process and they want to make sure that they're putting their time with clients like you who are really serious about buying your first or maybe your next home. So let's talk about what you can do to get pre-approved for a home loan and how you can get pre-approved for a mortgage in 2024. So when you're applying for a mortgage with a lender like myself, typically what we're going to do is get on a phone call where we talk a little bit more about your goals and really find out what it is you're looking to do. And what lenders like me will do is we'll have you fill out an online application where you fill out some very important information and provide some documentation that we need and that our underwriters need to be able to pre-approve you for a home loan and also find out how much home you can afford. One of the first things that we're going to look at when we're getting you pre-approved for a home loan is your credit. And I think a misconception that a lot of people have when it comes to purchasing a home is they think that you have to have perfect credit before you can actually buy a home. The truth is, the better credit score you have, the better of a deal you can get in terms of getting a loan. Typically, that means you're able to get a lower interest rate and or lower closing costs. Many banks that you speak to or many lenders that you speak to typically require you to have about a 620 or a 640 minimum credit score to be able to get pre-approved for a home loan. But if you speak with someone like me, where I have access to many different lenders, it's actually going to be a lot easier for you to get pre-approved. The lenders that I work with actually allow you to go as low as a 500. A lot of these bigger retail lenders and banks that you might see on TV or that you might be more familiar with typically have more stricter rules and regulations for who they're willing to loan their money to. And more often than not, different real estate agents and clients will come to me and my company whenever they're not able to get pre-approved by their credit union or their bank or a lender that they typically work with. And when they come to me and work with me, they find out they're actually able to get pre-approved very easily. So just remember that who you work with as your mortgage lender really matters and it's very important. Also realize that you don't need perfect credit to be able to buy a home. If you have a 740 or an 800 credit score, that's a really good thing because it's going to help you get a more affordable loan and get a lower cost of your loan. But even if you have a 580 or a 500 credit score, lenders like myself will still be able to work with you. The next most important thing that lenders like myself are going to look at to help you qualify and get pre-approved for a mortgage is going to be your income. And as you go through this process, you're going to learn about something called the DTI, which is your debt to income ratio. Now, your debt to income ratio is really just the relationship between your debt and how much money that you make. And it doesn't necessarily have to do with how much debt you owe, but more so what your minimum monthly payments are for all of the debt that you have. So as you go through this process, you're going to find that there are two types of DTI to be aware of. The first one is called your front end DTI or your housing DTI. And the second one is called your back end DTI or your total DTI. So your housing debt to income ratio really has to do with your monthly payment for your principal and interest on your future home loan that you are applying for in this process, divided by how much money you earn each month before taxes. So for example, if your projected monthly payment for a house that you want to buy is going to be $3,000 per month just for principal and interest, and your monthly gross income is $10,000 per month, you would take $3,000 divided by $10,000 and you would find out that your front end or your housing debt to income ratio is 30%. Your back end DTI or your total debt to income ratio takes that number into consideration plus all of the monthly debt that you pay. And that will include things like your student loan payments, your credit card payments, your car loan payments, as well as taxes and insurance. And we're not going to look at how much money you actually pay towards that debt. We're going to look at what your minimum monthly payments are. If on some of these loans, like your student loans, you might be on forbearance and you might not have a minimum monthly payment, what most lenders will do is usually take about 0.5%, maybe 1% of what the total outstanding balance is, and they'll use that as your monthly payment. Generally, most lenders want your total debt to income ratio, your back end debt to income ratio, to be less than 50%. So if your total debt to income ratio is at 45%, or 40% or below, that's a really good thing. And that's going to help you get pre-approved for a home loan much more easily. The third thing that lenders like me are going to look at when we're getting you pre-approved for a mortgage to buy a home is going to be your assets. In other words, how much cash you actually have to be able to close on the transaction. We also want to see how much money you have in reserves to cover your monthly payments. If you're in the military and you're applying for a VA loan, the good thing for you is that you don't even need to put a down payment. If you're not in the military and you're working towards getting approved for an FHA loan, your down payment is going to be 3.5% of the purchase price. When you do get an FHA loan, though, you're going to be paying something called mortgage insurance every single month in addition to your monthly housing payment. And you're also going to pay something called an upfront mortgage insurance premium, which is something that's going to increase your closing costs when you do close on that FHA loan. For a conventional loan, historically, the minimum down payment has been 20%, but with some of the new announcements and changes that Fannie Mae is going to be implementing, you're only going to need to put a 5% down payment for a conventional loan. And that's going to make it easier for borrowers like you or investors who are looking to purchase a home with a conventional loan. Now, there's also something in the market called a DSCR loan. The DSCR loan stands for the Debt Service Coverage Ratio loan. And this is typically a loan that investors get who are looking to purchase an income generating property. And at a high level, what this means is that the lender is actually going to use the income that the property generates to approve you and qualify you for a loan instead of using your own income. So this is an option that a lot of real estate investors utilize when they're purchasing single family homes or even multifamily properties. And this actually helps you get your foot in the door in terms of building your real estate investment portfolio, because they're not using your income to qualify you for the loan. They're using the income that the property generates. And typically, most lenders want to see a debt service coverage ratio of 1% or more, sometimes 1.5% or more. Now, me being a licensed loan officer and working at the company that I work at, I do have access to all of these different loan products. So if you have any specific questions about any one of these loans in particular, definitely reach out and let me know. So what we're going to do as lenders when we're looking at your assets, how much money you have in the bank, and when we're looking at your bank statements, we're going to want to see that you have enough money to close on the transaction. And in some cases, we're going to want to see that you have at least 2 months of monthly mortgage payments in reserves. We also want to see that you have enough money to cover the closing costs in addition to the down payment. Now, the last thing that you need to get pre-approved for a mortgage loan is going to be documentation. Now, the type of documentation that you're going to be required to show and provide to your lender really depends on what it is that you do for work. So if you're a W-2 employee, Usually what we're going to ask you for are your last 2 years of W-2s, in addition to your most recent pay stubs that you got from work. If you are a 1099 independent contractor, or you're self-employed, or you own your own business, what lenders are going to look at are the last 2 years of your tax returns. For other income that you have, like overtime or bonuses or commissions, we're going to look at the last 24 months of that type of income, and we're going to take that amount divided by 24 months. So if you just got qualified for overtime or bonuses in the last few weeks or in the last couple of months, unfortunately, you're not going to be able to use that income. Other types of income that we can use to help you get pre-approved for a home loan are stocks and bonds, capital gains, child support, alimony, and all of this income added together is going to help you get pre-approved for a home loan much more easily. You're also going to need to provide bank statements over the last few months to be able to show that you have enough money for the down payment and the closing costs. Now, after you're finally pre-approved for your home loan, you're going to know exactly how much of a loan amount and how much of a home you can actually afford. Your lender is also going to provide you with a pre-approval letter that shows the company letterhead and shows exactly how much you're pre-approved for. And this is going to help you when you're working with realtors, because they're going to be able to help you find a property that fits exactly within that budget. And it's a tool you can use as leverage when you're negotiating with a seller of a home. So again, if you are planning to buy a home this year and you want to start this process, take a look at my information below in the description, and you're going to find a link to my application that you can actually use to fill out and start this process of getting pre-approved. You can very easily go through all these steps that I just mentioned, fill the application out, provide all the documentation, and I can actually get you pre-approved in 24 hours or less. Again, you're always welcome to reach out to me for any questions you have about real estate, relocating to San Diego, any questions you have about mortgages, refinances, HELOCs, and you can contact me using the information below. I hope you found this video very helpful, and I will see you on the next one.